Everyone, welcome to a brand new episode of the Outlier podcast. I've got Eric with us today. Hi, Eric. How are you doing?
Hey, how's it going there today?
Going good, right? New York is becoming a bit on the chilly side. So, yeah, I would say onset of winters is what we are looking at. End of spring, but yeah, all fun. How are things with you out there in Phoenix?
Well, as always, it's sunny. It's getting a little colder now. It's low 90s, so I can't complain too much. I do miss sometimes the fall though. I do like the fall, so I'm not gonna lie.
All of, all of us do like the fall. No one of us do. At least I don't like winters for sure. The New York
Yes.
winters. Yep, yep. So, quick introduction who Eric is. Eric is one of the credit union leaders, I would say, right? Very well known leaders. He is Senior Vice President of Research and Development in Arizona Financial, based out of Phoenix. Been with the credit union for almost, Eric, if I'm not wrong, close to 17 plus years, right? Eric started with Wells, long time back. After Wells, he drank the credit union Kool-Aid, and after that he could not leave us, right? So that's pretty much about Eric is. Uh, Eric, in case you want to talk about, so let's start about your journey. So what has been your journey so far?
Yeah, into the credit union as a whole. I came in back in 2008 as a repossession specialist, and then quickly got to oversee our risk area as it related to repossessions, foreclosures, and bankruptcy. So it was a joyous time, let me tell you. It was obviously I'm joking a little bit around. Obviously, it was a difficult
Yep,
time, and
yep.
definitely when you're talking about people's lives. So it was sometimes it wasn't enjoyable, but at the same time, we worked through it as a credit union. I'm glad we really did take a member first approach on a lot of things. But after the recession, kind of migrated into the cards realm. That's where we got to do my first implementations as it relates to like card controls and Apple, Samsung, Google Pay back in the day. Then moving over to digital banking, got to have fun with the online banking side of things and all the different digital products, which then led to us, onboarding a bunch of software for our members and our employees, which then in around 2017, we kind of created this, what we call research and development area. So essentially, we help in anything that's software related for the most part, coming into the credit union, member facing, or just strategically in terms of things my team handles, and
Mhm.
we try to make good experiences for members, employees. That's basically it.
Absolutely. I mean, you're the center stage of, I would say, innovation, because unless and until R&D is fueled by good R&D, having good softwares power the experience both on member as well as the credit union side. It's very difficult for a credit union to win nowadays with, the large banks, the Chimes and Revoluts coming in, right? So it's not easy, right? So you got a very difficult job for sure, right? Keeping up the pace and with the size and scale that we have right now. So Eric, since you are very deep onto technology, right? For the lack of better words, anything technology that goes to Arizona Financial has to go through you. So, for the lack of better words, right? Because you do research. So, what's your main goal for technology, right, per se, for the credit union in the next few years?
Well, one thing I will say, yeah, I would say a lot of the technology side will come through my team, but it is a team atmosphere. So our IT
Yeah.
area works. We work partners with them. They obviously handle a lot of the heavy IT piece of security side of things as well too. And so, really, what our main goal as a whole is just to make sure we don't become laggards as it relates to technology. It's honestly that simple. That's the overall high level view. And then more importantly, we want to be ready that we could pivot to if we need to. So since everything essentially involves technology now, no matter what,
Yeah.
we need to just make sure that it doesn't lag, because if we do, then we're not serving our members well, and actually our employees as well as too. So that's our main goal. We just want to continue to make the member and employee experience good.
That's like table stakes nowadays. Unless you do that, it's difficult to keep up the pace against the larger players and the faster players, right? So Arizona Financial is one of the very few credit unions who have rolled out BNPL. Because if you ask me, BNPL is becoming basics, right? I mean, for any consumer experience across the ecosystem, be it ordering foods for DoorDash, to be it basically ordering your next cab, to going to Amazon and buying your next cab, right? Every single thing has the flavor of embedded finance, and it's like normal nowadays, and it's abnormal not to have. But it's difficult to have credit unions walk the same path, because we are still catching up playing that game. So, what is your experience setting up BNPL for Arizona Financial, and where do you think is the market for BNPL, specifically for credit unions, heading towards?
Yeah, I mean, yeah, buy now, pay later, BNPL, it is like the new hot item, right? And especially in the lending world. And if you think about it, really, buy now, pay later is just a new version of layaway back in the day.
Yeah,
I just remember being a kid, and mom, we'd be at the store, and mom was like, "Oh, it's on layaway." I'm like, "What? I can't take my present home now." Whereas with buy now, pay later, it's kind of like the updated version of it, where yeah, you do get your gift, and then you pay later as well. But for us, yeah, I mean, we have about 20,000 unique members and about $1.5 million worth of funds that are leaving going towards a third party buy now
yeah,
pay later provider. So we used our data just to look to see, man, this we have a lot of people that are interested in it. And again, with one of our goals being we want to make sure we're there for our members. This was something where we said, okay, it looks like members are interested in it. And we joined a smaller group of credit unions and smaller banks that really have implemented buy now pay later, but it is growing substantially. We use like a third party. We partnered with third party to get it in place, and that's where the technology side comes into play. And so it's a lending product, yeah. But the nice thing is that most of it's an automated process where that's where the technology comes into play to make it easy for the membership as well as staff on the back end. So I will say if again, it's these are for the most part smaller dollars. They're not massively large like an auto loan or anything like that.
yeah.
But again, it's meeting our members where they need to with some good technology to help them get there.
Yeah, I think this is becoming very normal nowadays. I mean, unless you have a BNPL in your suite of products, you're missing something for sure. If not now, in the next 5 years, like, you're nowhere if you don't have a BNPL. So it's a very first mover advantage that you've taken. And I think that's fantastic. Our next question is across decisioning, right? So talking about technology, it's evolving so fast, right? I'm starting with your member onboarding to servicing across different technologies coming in every single day. I mean, AI is like, I mean, I hate to word the use AI. I'm a data scientist myself, but again, the AI that I knew 10 years back versus the AI that is right now, it's completely different. People are talking about agentic AI and actually implementing agentic AI and agentic workflows within the decisioning ecosystem. So how do you decide which new technologies to invest for the credit union? Because again, it's not a uh, once once you buy it and you just leave it. It's not that. It's very strategic for you, right? Both in terms of investments as well as your strategic goals.
Yeah. It, I could say I could probably spend the next few hours talking about how we go through it, but I'll keep it as simple as possible, and I'll touch a little bit on like the AI aspect of it. Like, so we look at it first thing, right? For whatever technology we're looking at, is this a problem that we're trying to solve for either our members or our staff, or is this a solution to a problem that's not there yet? And I know it might sound a little weird, but ultimately, is whatever technology out there that people are selling, because there's obviously tons and loads of salespeople out there selling, oh, we can do this. Is there a problem for that yet? Is there a problem need? And so what we try to do is obviously we want to focus on the ones what's going to benefit our members first. What's going to be the most important thing, and that's going to be based on different trends and things that are being asked. Then we say the same thing from on the employee side, right? Like what are some tools that we can do to help out? And so you mentioned AI, right? I'll dive into that briefly. One thing you need to do is you need to change your podcast name to the Outlier Podcast.ai, because that's apparently all you have to do. And now you're an AI company. But jokes aside, it is very difficult to really get a straight answer sometimes when talking with some companies to say, okay, are you talking about more of the legacy AI, which is fine, the machine learning, the standard training, the intent type of AI, which in a lot of cases right now still solves a lot of issues. Or you're talking more on the generative AI, using Agentic and things like that. And so some things that we've looked to do internally for the employee standpoint is like our operations manual, right? Like where they can find certain things. Right now, we've tried it out where they can ask it a question just like it's like a chat GPT of some sort or a Google Gemini where it could help out our call staff to better recognize and more easily obtain answers. Now, I think that's probably the number one first use case of any generative
Yeah.
AI in most institutions. But what's also nice is that it also gives you the other way, the standard way of how we used to look these things up. So we tell everybody, we've given training to say, listen, you don't trust anything 100%. We're not, you don't put any sensitive data and stuff, the normal things. But like, that's an example of that. We're trying, let's try to help out productivity if we can. Let's help out our staff make things better. And then from the member standpoint, what's going to help, right? Not all generative AI items are helping out members. Some of them are just like, hey, we would just love to have different rewards for something. Some of these things are a little bit basic, which also includes technology. How do we integrate that into online banking and things like that? And so that's, again, where do we like start, and how do we determine which technologies we're going to look at? Again, just comes down to, is it going to benefit our members, and is it going to benefit our staff? And then I would say the third one would also be kind of like, is this newer thing a little bit more cost effective than in the past? And I'll take one quick breath, but I'll mention one last piece on that is, as you know now, like a lot of things are API driven, whereas even 5 years ago, not everything was. So knowing that there's a lot more API, I think, and just development as a whole has become easier. You talk about AI, that's a good use case to help out with some of that development. Are we in a stance where we could develop, or at least maintain things internally now versus always using third parties for things? And is that more cost effective if we do that, if we maintain the staff? And so those are some of the new kind of questions we're asking ourselves as we look at solving some pain points that we need for our members and our employees.
I mean, that's the best thing I like about our world, right? I mean, we focus on members, employees, and the last is about profitability. We don't talk about EBIT. We don't talk about profitability. I mean, first let's think about how can it help the word help, right? Vis-a-vis other large banks. So that's amazing to hear about, right? The way I look at technology implementation from the lens of betterment. That's what we need more people to do, right? So now I want to focus on bringing new technology by not shaking the current ecosystem, because again, credit unions have been there for hundreds and hundreds of years, right? Now, yeah, I mean, let's face reality. We've been here for more than hundreds of years, right? Then we got our core banking. We got the giant core banking softwares coming in. We got a LOS, we've got collections, we've got mobile banking, digital banking, all cool stuff, right? But again, the problem is connectivity, right? I mean, if you want to bring in a new product per se, it has an API that talks to your core or talks to other systems to which data transfer needs to happen. My question is, so what is the hardest part about bringing new technology into a credit union like yours? Are you also facing the same problem of connectivity, or is it a broader, thing to talk about?
Connectivity is definitely one of the toughest parts. And the main reason for that is the song and dance of bridging two different technology partners together. So whether it's our core and online banking or LOS and our core, that by far, if you had to say one thing, that's the most difficult piece of it. And I get it, like if you're an online banking vendor, it's very difficult. Like you have to try to connect into every single, other vendor or potential partner that all of their clients have. Like it's very difficult. And so I get it, but that's where that connectivity piece comes into play. If things are more open, if they have the open technology, then some of these other institutions that understand it could maybe they could do the bridging. Maybe they can connect the APIs. Whether it's using middleware or even another third party. So now you're talking about a third party in the mix, but at least it can help implement a little bit more. But by far the hardest part is indeed the integration and just getting all parties and on the roadmaps at the same time and say, oh, okay, well, we're going to have to wait because we have to talk to this partner of ours. So yeah, it's until everybody is on the same standards, which will never happen. I think that's the boat that most of us are in.
Nice. Now you've been one of the front runners of digital, right? Digital in credit unions. You got BNPL, one of the very first players to get BNPL in. You want to talk about, so what is the next big thing that you are doing in digital to help your members have a better service?
I mean, honestly, we're kind of in a stage of let's enhance what we currently have. Simple things, online banking experience, trying to update the UIs there. Now, again, that's partnering with our third party. We only have so much control on that, but if they're giving us more of the ability to customize and to build it our own way, making it easier for them to communicate. We implemented easier ways for our members to submit requests on different changes. Now, that's nothing super sexy or crazy out there, but it is extremely functional and it's something that a lot of our members are craving for. And not only on top of that, you have your front end where somebody maybe can submit something, but what we're doing is on the back end now is that we're automating it. We're capturing the data, the packet, we're pushing it into a queue. Some of those things can automate on the core system. Other things may need to be looked at, but before, you're just having something come in and goes into an email, right? An email box that's snapping up the work. That was like, a few years ago is how you do it. And so we're continually trying to automate and digitize our internal piece. And ultimately, how does that help out our members? It's going to make it quicker for them, pretty, faster, things to that degree. Now, on the that's kind of the boring behind the scenes stuff that I think is very important, but at the same time, it might not be that flashy. But so on the flashier side, some other things, it's all research right now, just seeing what's out there. But obviously, you have two new bills as it relates to cryptocurrency. You have your Stable Act, your Genius Act, you have with stable coins and stuff. So again, kind of making sure that we're continually researching, not necessarily implementing. But if there is a need, and consumers all of a sudden want to convert everything to a stablecoin, we want to be able to support and help them. And so that's just something that's a couple years down the road, probably, but that's something where we're trying to stay in tune. And then on top of that, too, just making it easier for our members to invest in, whether it's just traditional assets, within our online banking or something, other types of assets out there and the DeFi. Those are just little things that we're, again, in research stage right now, not addedly implementing, but we want to be ready that we can pounce when we need to.
I think that's a separate roundtable that we'll put up about. I mean, we talk about stable coins a lot because I am a huge believer of stable coins. Just to share a quick number, right? So Standard Chartered predicts by 2028, $1 trillion will move out of emerging economies, basically economies of other countries, and flow into US stable coins. They're talking about a $1 trillion exodus coming into the US market. Leave aside whatever, in transfer will happen within the country, but this is the volume we're talking about. Unless we think about seriously, I think it will be very difficult. I mean, what you're doing right now, researching about stable coins, you let me know once you implement your first product. I would love to hear more about that.
Yeah. No, I mean, I think you're right on too. Yeah. There's a lot of money that's coming in, and ultimately it comes down to the consumer, right? Is the average consumer going to adopt this type of thing, or is it going to be something that's behind the scenes that maybe they don't need to adopt anything? It just kind of happens. And so it will be, it will be interesting. I promise. I will talk to you first thing whenever we get into that.
That's great. Now moving on to the credit union model, right? So the credit union model is great for us because we believe in it. We serve our members. That's what we believe is the most important thing. But how do you see the model evolving in response to the, I would say, for the lack of better words, rapid innovation that's happening, right? You see neobanks, you see big banks, you see fintechs. A few days ago, Revolut promised to invest like what? I think more than $500 million back home in India. They're doing the same thing over here. So Revolut, new bank is like one part, and then you've got other challenger banks. So how do you think is the model evolving? Because if you just stick to our same model, it's difficult to sustain in the ecosystem going forward.
You're 100% right. And again, this could be another hours-long conversation on where we're going on it. But I mean, it's a crazy world, and it goes very fast. The spread of information that occurs, whether it's through social or online TV, is insane compared to 15 years ago, 10 years ago even. So and a drop of a dime, you can see things that happen with, like in 2022 with like a liquidity crisis in a way where people are just drawing funds out. So what do you do, right? How do you capture more membership? Well, you got to adapt, right? One of the other things that we are doing is improving even just the online account opening experience, right? Right now, sometimes we have some hiccups on certain things. Well, we want to make it where it is even easier and small, simpler, right? Because that's what some of those neobanks get to do, right? They open up accounts. It's pretty simple. And then bringing value, right? Like why does somebody want to bank with a credit union, right? So why do they want to work with us? So, okay, maybe, there's different types of incentives that we can give members. I mean, obviously from a credit union standpoint, traditionally there's different payouts and different things. We have some stuff that I'm not at liberty to announce just yet, but we'll be coming out next year where we can help out some people, based on, they've been with us, different relationship type things. And so you have to adapt to those times. The fact is most consumers, I should say, most consumers, specifically younger, they have multiple financial institutions. You have to adapt to know that you're not going to be the only one anymore. They might have a credit card, an investment account, somebody else, their primary checking, where their direct deposit comes in. They may even have a bill pay account. And I think that's that's the big thing to understand is that, and I think our leadership understands that, our board understands it pretty well. And we have a very, very good understanding as a whole here that we're not going to be the everything for everybody all the time, but we need to make sure we do good and our key pieces. And that's obviously serving our members and making sure that they're satisfied on things and providing them the tools and resources they need.
I mean, PFI is a myth. I mean, there's no concept of primary financial institution now. An
Yeah.
average US consumer has what? 21 relationships right now.
Yeah.
What you can maybe think about is top of the wallet, right? I mean, if your institution top of the wallet, I think you win the game, right? So in the interest of time, one last question, Eric. I know you have to
Yeah.
run next 2 minutes. So what's one thing, right? If I were to ask you, you're really really proud of that you've launched at Arizona Financial since you've taken up this role?
Honestly, there's a lot of things we're proud of. I truly am proud of that we launched our department and that we had the forethought to think now have this team that really our whole job is to make sure that we can implement technology as needed. We can help out our employees in getting them the software that they need and restructure how our checking deposits are, or our checking products are, savings, all the different things. So I'm very proud of that. Now, from a specific product standpoint, this is going to sound so funny. The thing I'm most happy about, this is going way back, is whenever we got Face ID and thumbprint ID. Like that to me, for our mobile app, that to me was the most groundbreaking thing because it was amazing. It's like, this should be a no-brainer. But oh my gosh, when we finally got it, not needing to necessarily use your password every single time was huge. A second one would be, I would say, our card control. We had a separate card control app back in 2014 we launched, or 2015, pilot in 2014, which was, we were one of the first to do that at the time. And it really was, it was a hugely successful product. A lot of our members liked it. It saved them from fraud. It saved, obviously, fraud dollars on our side. And it gave that those immediate alerts. So people knew exactly when they were spending on things. So, there's so many of them, but I'll go with those for it.
Interesting. So, Eric, this was a great conversation, sir. I know run the next meeting. But again, thank you for your time today. We really appreciate it. Thank you, sir.
Thank you so much.
Salute.